Cathie Wood's teams just dropped their 10th annual Big Ideas report, 13 bets on the technologies that will reshape the entire global economy. Every finance channel is going to read you the headlines. I am going to do something different. I am going to show you the one technology that quietly lit off because that omission may be the most useful signal in the whole report, and is you if you stay at the end, I will give you the exact playbook I've been used as a small retail investor to position for all of this with just a few hundred dollars a month. Let's go. ARK's central claim is simple and enormous. We are living through the biggest technology investment cycle in history, bigger than railroads, bigger than electrification, bigger than internet. Their estimate: disruptive platforms could add almost 2 full points to real GDP growth every single year this decade. Now, ARK is famously optimistic. Their timing has been wrong before, but here's the thing: even if they are only half right, this is not a stock market story, it's a whole economy story. And in every previous cycle, their fortunes went to the people who positioned it early and held on. So the real question isn't it is happening, it's where exactly does the money flow? Here's the mental model that simplifies this entire report into one sentence: AI drugs, humanoid robots, robotaxis, space data center. 13 different ideas, but they all eat the exact same diet: chips and electricity. Every single idea funnels down through two doors: compute, yeah, computes, and also power. And here's what most retail investors miss: the chips are getting older. The real bottleneck, the thing there's simple not enough of, is megawatts. I make this channel for next to one of the largest shale energy plays on the planet, and I watch this build out with my own eyes. The energy constraint is not a theory, it's trucks, turbines, and transmission lines. You don't need to guess which robot company wins. Own what fits all of them. First theme: AI native biology. ARK calls it multi-omics, and they believe it triggers profound shifts in healthcare. Their list includes names like Tempus AI, Illumina, and CRISPR Therapeutics. Now, here's the honest part nobody selling hope tells you. I compressed drug discovery from years to months. Amazing, but look at this pipeline. Clinical trials, the FDA part still take 6 to 10 years. You cannot run a human trial on a GPU. So, where does the value actually flow in the next 5 years? Not to companies promising miracle drugs. It flows to the data and tools layer. The companies that own the clinical datasets and the machine every lab has to buy. Shell shovels skip lottery tickets. Remember that phrase is the theme of this whole video. Second theme: robots. And this is where I have to correct the internet. All the hype is on humanoids, cool videos, viral demos, but follow ARK's own sequencing. The money tells a different story. Wells come before legs. Robotaxis and autonomous delivery are generating revenue right now. Removing the human driver collapses the cost per mile. That is not sci-fi, that is a spreadsheet. Humanoids. The brain is basically solved. AI handles that. The hard part is not the body. Actuators, dexterous hands, batteries. That is a hardware grind. and it's pointing to 2029 and beyond. So if you are allocating today autonomy first humanoids as the long shot figure. Okay, remember the beginning of the video? Here's the payoff. 13 big ideas: AI, robots, energy, blockchain, space, biology. And quantum computing appears 0 times. Think about that. Think about what that means. The most aggressively optimistic tech investor on Earth, people who forecast robotaxis and data centers in orbit with a straight face, looked at quantum and left it off the board. That does not mean quantum fails. It means the stock market payoff probably isn't in this 5-year window. Meanwhile, quantum pure plays trade at over 50 times sales, and they found themselves by printing new shares. Even if the technology wins, the shareholders can lose. The company selling you quantum ETFs will never say this. ARK just did by saying nothing. Now, here's the leg of the report an average retail investor completely ignore. And it's quantum's exact opposite: space and defense. Unlike quantum, these companies invoice real customers today, launch contracts or government programs, satellite connectivity deals. Launch costs have been collapsing for a decade, and every time the cost per kilogram drops, entire business models that were impossible become inevitable. The wildest one in this report: data centers in orbit, where my two favorite words finally merge: compute and power, literally in space. And defense budgets don't care about recessions. That is the most patient customer on the planet. Last thing, and this is one's personal. ARK says financial infrastructure is being rebuilt on chain. Stock that trade 24/7, settle instantly, and cross border like text or message. Here's why I know it's real. I already use it. I've been trading tokenizing stock for months from Argentina, a country with capital controls. If it works here, probably it works anywhere. The way to own this isn't picking which token pumps. It's owning the rails, the exchanges, the brokers, the stablecoin infrastructure, the same picks and shovels logic. Third time it's appeared in this video. That is not a coincidence. Alright, the playbook. He does a normal person, small account, regular paycheck, actually position for all of this. Quick reminder, this is education, not a financial advice. Here is the structure I use. It's called a barbell: boring core, wild edges. 50% goes to one boring index fund covering semiconductors or the Nasdaq. That is the own what fits everything position. One automatic buy every month, no exceptions, no watching charts. 35% split across 4 teams we just covered: AI, biology, autonomy, space, tokenization. Small positions, and each one gets a kill criteria, writing down in advance the specific event that made me exit. No feeling involved. And 15% stays in cash, dry powder. Its only job is to buy the panic when everyone else is forcing to sell. And the gold rule: the core is never sold, 5 years minimum. The whole system runs on autopilot because the biggest threat to your returns is you checking the app. Now the part of the hype videos skip, because if I only sold you upside, I'm part of the problem. Risk 1. Everything in this video is secretly one trade: AI stock, crypto, robotics. They all rise and fall with global liquidity. Diversifying across them is less diversified than it looks. Risk 2. Taiwan. One island manufactures the chips behind the entire thesis. That is a single point of failure with no real edge. Risk 3. If an AI capex pauses even for a year, the hot names in the space can fall 50% or more. Not mine. Will. The ticket price of 10x upside is surviving the minus 50, which is exactly the position sizing. That boring 50% score is the strategy, not a compromise. Five, five takeaways, 30 seconds. 1. The acceleration is real. Own the index that own it. 2. Compute and power is the checkpoint of every single big idea. 3. Quantum's omission is a timing signal, respected. 4. Space is the under pressure leg with actual revenue. 5. At the smile account sizes, your savings rates beats your stock picks every time. If you want a ground level view of this build out, the energy, the compute, the money, subscribe. I report from next to one of the largest shale energy plays on the planet, and I show you what the spreadsheets can't. See you the next one. Cathie Wood's teams just dropped their 10th annual Big Ideas report, 13 bets on the technologies that will reshape the entire global economy. Every finance channel is going to read you the headlines. I am going to do something different. I am going to show you the one technology that quietly off because that omission may be the most useful signal in the whole report, and is you stay if you stay at the end, I will give you the exact playbook I've been used as a small retail investor to position for all of this with just a few $100s amount. Let's go. ARK's central claim is simple and enormous. We are living through the biggest technology investment cycle in history, bigger than railroads, bigger than electrification, bigger than internet. Their estimate, disruptive platforms could add almost 2 full points to real GDP growth every single year this decade. Now, ARK is famously optimistic. Their timing has been wrong before, but here's the thing. Even if they are only half right, this is not a stock market story. It's a whole economy story. And in every previous cycle, their fortunes went to the people who positioned it early and held on. So the real question isn't it is happening, it's where exactly does the money flow? Here's the mental model that simplifies this entire report into one sentence. AI drugs, humanoid robots, robotaxis, space data center. 13 different ideas, but they all eat the exact same diet, chips and electricity. Every single idea funnels down through two doors, compute, yeah, computes, and also power. And here's what most retail investors miss: the chips are getting older. The real bottleneck, the thing there's simple not enough of, is megawatts. I make this channel for next to one of the largest shale energy plays on the planet,